Infamous for its genocides, but revered as the birthplace of the stock market, the VOC, or the Dutch East India Company, serves as one of the most eventful case studies of all the good and all the bad that stems from unchecked capitalism. With an $8 trillion market cap, it was objectively the wealthiest company in history, which means that this is not the tale of some Y Combinator startup. No. The VOC was equipped with godlike powers and was allowed to issue currencies, imprison enemies, and even wage wars. And yet, somehow, this is also the story of underdogs, struggling to find their footing in an era dominated by European empires. This is the story of the desperation and innovation that led the Dutch to create the most powerful entity in history. The year is 1580, and the Dutch and the Portuguese are fighting over the two things Europeans have always fought over throughout history: religion and spices. The Dutch were Protestants, while the Portuguese were predominantly Catholic. Different churches, same God, big problems. And to add economic fuel to this holy war, the Dutch were also feeling the financial pains of Portugal's growing monopoly on the lucrative spice trade. The Portuguese had been supplying Europe with spices from Indonesia, which was known in Europe as the East Indies. This trade was a goldmine for Portugal, and in the pursuit of growing their wealth even more, the Portuguese teamed up with the Spanish, Italians, and Bavarians to build trading ports in modern-day Hamburg, Germany. Their aim was to choke off Dutch trading routes from the world stage. It was warfare through economics, and it was going to require a response from the Dutch. Now, if you're wondering, why is everyone taking such a confrontational approach to foreign affairs? It's because during this time in history, European powers operated in accordance with a cold-blooded concept with a silly name: mercantilism. Mercantilism is an economic policy that seeks to dominate trade relations by maximizing exports and minimizing imports, and often entails hoarding resources for one's own advantage. This nationalistic economic policy was not about playing fair. It was about winning. You see, mercantilism reduced the complex world of global commerce to a child's mantra of, if I win, you lose. And in a Europe increasingly crippled by scarcity, this doctrine led to colonization, exploitation, and an obsessive quest for positive trade balances. Before the rise of the VOC, mercantilism had transformed little Portugal into an unlikely global powerhouse during the 15th century. Mercantilism motivated the tipping point that started Portugal's demise. Portugal's leader, King Sebastian, had his sails set for North Africa, believing it to be the perfect place to expand trade as well as win some points for Team Catholics, because the only thing King Sebastian wanted more than to be at war with Protestants was to be at war with the Muslims. And that is why Portugal invaded Morocco. This was a total catastrophe and resulted in King Sebastian's death. But more importantly, it resulted in a succession crisis that ended with Spain's king casually stepping into Portugal like, listen Portugal, we're both Catholic, you're leaderless, so now I'm in charge. This is really getting the Dutch freaked out because they've actually been at war with Spain this entire time over their very independence. And so now the Dutch are like, wait, so we're at war with Portugal as well? This is getting really tense. And now, with even more reason and even more urgency, the Dutch were as determined as ever to overthrow Portugal's monopoly on the spice trade. But determination alone wasn't going to suffice. After all, the Dutch were in the dark about the very location of the Spice Islands. The Portuguese had an advantage over the rest of Europe. The advantage of information. Information that they had gathered over the better part of a century expanding their spice trade. And the spice trade had become a game of information asymmetries. Information asymmetries occur when one party in a transaction possesses superior information to the other. This unequal knowledge can provide a significant advantage, influencing choices or even allowing one party to take advantage of the other's lack of information. In this historical battle between the Portuguese and the Dutch, this asymmetry was pivotal, shaping control over markets, resources, and key positions. Then, in 1592, the Dutch watched in awe as the British fell upwards into some serious information. They seized a Portuguese ship filled with valuable merchandise from India and China. How valuable, you ask? Well, believe it or not, the cargo on the ship was worth more than half of the entire British treasury at the time. And alongside the cargo, the British discovered maps revealing secret trading routes in Japan and China. And to illustrate the power of information during this time period, this unexpected find ignited a monumental shift in British ambition, setting the stage of Britain's age of discovery and its vast, infamous colonial empire. The Dutch, now inspired by the British and looking for their own secret maps to start a wave of empire building with, dispatched merchant spies to Lisbon. Their mission was to uncover as much as possible about the Portuguese, the Spice Islands, and the hidden trade routes. In 1596, their efforts culminated in the publication of Itinerário, a book that laid bare many Portuguese sea routes and trade secrets. This played a monumental role in enabling the Dutch to explore Asia and take the first step towards shattering the Portuguese monopoly. But everything that comes next was going to require a lot more than maps. It was going to require money. And investing in expeditions was a very high-risk venture back then, far riskier than the latest ICO your cousin's trying to talk you through. If you didn't die from pirates, diseases, shipwreck, or being hijacked by fellow European Christians from a different church, even if you were to make it home alive after one of these expeditions, the profitability of your expedition would be subjected to the peculiar economics of the spice trade, namely inelastic demand for spices. In economics, inelastic demand means that when the prices fluctuates, consumers' buying habits stay about the same. This is often associated with products or services that are necessities, have limited substitutes, or are perceived as essential to consumer daily lives. In relation to this, Europeans were desperate for spices. Raise the prices, lower the prices, they were going to buy those exotic flavors regardless. The supply side of operations, that was an unpredictable mess. The availability of spices could change without your knowledge once you've set sail. The spices you head home with might not ever make it home. Your crew might take off with half the cargo, your competitors might purchase spices you needed. Not to mention, there's also 1,000 other ways you might just die at sea. This combination of unshakable demand and whimsical supply made the spice trade a tantalizing but treacherous venture, a game of high stakes where fortunes were made and lost on a pinch of nutmeg. The solution? A cartel to control supply, like OPEC, but for oregano. In economics, a cartel is a group of independent market participants who collude with each other in order to improve their profits and dominate the market. In the 1600s, the English formed a cartel known as the British East India Company. You might have heard of it. The Dutch weren't creative enough to come up with a better name, so they named their cartel the Dutch East India Company. But before you laugh, the Dutch are about to make the most innovative move we've seen so far. Now, individual voyages in search of spices required substantial financial investments. Successful voyages could yield returns of 4 to 5 times the initial investment, but this landscape lacked stability and regulation. Taking on such high risks alone was daunting. To manage the risks of high-stakes trade voyages, Dutch merchants sold shares in their ventures, giving rise to the concept of joint stock companies. This pioneering approach allowed investors to buy fractional shares, diversifying their portfolios and mitigating risk. The term stock, originally associated with boat construction, eventually led to the creation of the world's first stock market, the Amsterdam Stock Exchange, solely dedicated to the VOC. Such an exchange was unprecedented for its time, as it not only allowed the Dutch citizens to cash in on the riches of the spice trade, but it also financed the Dutch with a war chest more than 2.5 times that of their English counterparts, allowing the Dutch to scale an army and navy necessary for such an ambitious plan. Then in 1601, the Dutch provinces and numerous large expedition companies combined forces to establish a single entity that would monopolize trade in the East Indies. Officially formed in 1602, the VOC was overseen by a 17-member board and was bestowed the authority to recruit its own personnel, wage war, and in the words of historian Stephen Brown, operate as a state within a state. The VOC now represented a stable investment opportunity by masterfully executing a strategy of vertical integration. Vertical integration is an arrangement in which the supply chain of a company is integrated and owned by that company. By assuming control over every facet of the spice trade process, from owning the ships to governing the ports and plantations, the VOC functioned as a single entity in which people could invest. This complete command over every step of the supply chain allowed the VOC to dictate prices, quality, and availability, solidifying its dominance as a driving force in the global marketplace. The VOC was initially funded with $100 million in today's value, but unlike other trading companies of its time, this seed capital was intended to sustain business ventures for an extended period, rather than a single mission. So, with its sails set, the VOC got right to business, and in one of their very first missions, 3 Dutch ships spotted a lonesome Portuguese trade ship on the coast of Singapore. The cargo? Chinese silk, musk, and a mountain of gold. Why do we know this? Because the Dutch stole the ship. While this only made the Dutch's relationship with the Portuguese way more tense, the Dutch didn't mind at all because the ship was so valuable that the auctioning of the cargo and the ship itself resulted in a 50% increase of the VOC's funds. This dramatic adventure would mark the beginning of the end for the Portuguese spice monopoly and the beginning of the VOC. And in 1609, they reached the Banda Islands in Indonesia. The Bandanese initially welcomed the Dutch, finding them more tolerant of religious differences than the Portuguese, but the Dutch deceived them into exclusive trade agreements the Bandanese didn't understand and were doomed to violate, which they inevitably did, trading with the British. The VOC then tortured British sailors to send a message back to Europe and retaliated against the Bandanese with force. Control over the nutmeg trade grew more contentious until one day a group of Bandanese ambushed and killed 50 Dutch soldiers. This prompted further aggression from the VOC, which went on to torture Bandanese leaders in trade negotiations, murder thousands of people, and carry out ethnic cleansing initiatives. The few who survived were enslaved, and the VOC began repurposing the land in the Banda Islands with intentions of scaling Dutch plantations and colonies for their new Asian base. Except, no one from the Netherlands actually wanted to come to Asia, so the Banda Islands had been decimated for nothing. The VOC then expanded into Indonesia and set up the Asian headquarters in Batavia, located in modern-day Jakarta. After experiencing the hardships of scaling plantations, the VOC focused on a more diplomatic trade initiative, arbitrage, seeking to broker value in Asia rather than create it. At the time, Europeans didn't really have much to offer Asian partners except gold, silver, and a bit of arrogance. European traders therefore had to pay for spices with the precious metals, which were in short supply in Europe everywhere except amongst the enemy Catholics, Spanish, and Portuguese. This made trade in Asia a real headache for the VOC, as it meant that they first had to build up a trade surplus of metals within Europe before sailing for Asia. To overcome this, the VOC began to send ships filled with precious metals from the Netherlands to Batavia and used it to facilitate trade within Asia for silk, cotton, porcelain, and textiles. This new trade route meant that over time, they didn't have to rely on sending precious metals from Europe, though initially they did have to set up a hefty trading capital fund in the Indies. This inventive system allowed them to engage in much more trade despite liquidity constraints on things like gold and silver, and as a result, the VOC's influence spread like wildfire. In 1638, the VOC enjoyed exclusive trading rights with Japan. In 1640, they had forced the Portuguese out of Singapore and took control of the monopoly on cinnamon. By 1648, the Dutch were widely becoming one of the most prospering economies in Europe, with an interest rate of just 4% compared to England's 10%. Much of the VOC's money was making its way back home, and the Dutch entered a glory age of cultural and intellectual innovation, prosperity and riches fueled by colonization of foreign territories. Over the next 2 decades, the VOC would go on to monopolize trades in clothes, nutmeg, and mace. By 1669, the VOC was an unprecedented economic behemoth, boasting over 150 merchant ships, 40 warships, 50,000 employees, and a standing army of 10,000 men. Not to mention, the VOC also had a staggering 40% dividend payout on its investment. A dividend policy is a structural plan a company follows to distribute profits to its shareholders. It outlines specifics such as how often, when, and how much it paid out. The VOC's bold dividend policy was certainly a symbol of its staggering success, but beneath this dazzling facade, the VOC's downfall was already taking shape, and the fall of the richest private company the world had ever seen would come from the same factors that ensured its success: its heartless pragmatism and desire for greed. The VOC's dividend policy was proved unsustainable and resulted in paying out its shareholders more than its profits. The strange historical explanation for this is that the VOC only did an auditing of its financials once every 10 years. No, bureaucracy wasn't really a big thing in the VOC at all, and actually, corruption began to run rampant within the VOC's ranks. Corruption born from poor salaries and a culture of backstabbing and distrust. Change in power in Japan resulted in the unpinning of the VOC's Asia trade system. Changes in rulers and policies, such as the samurai's approach to outside trade in Japan, gradually squeezed the company out of its once thriving market. But having already invested so heavily in the Batavia capital, the VOC tried to pivot into selling lower volume, higher margin goods. But they struggled to remain profitable doing so, as their infrastructure was so costly. The very base that had once given them their advantage was now a financial liability. The VOC's true ending is complex, but its effective downfall is perhaps best encapsulated by the historian Stephen Brown, who said, "Ultimately, maintaining the monopoly cost the VOC more than the spices were worth." So after 197 years, nearly 2 centuries of trading, pillaging, and sailing, in 1799, the VOC was eventually done in by corruption and competition and declared bankruptcy. If you enjoyed this video, be sure to stick around for next week, where we'll be doing the video you guys have all been requesting, the Opium War.